Good morning. I'm Epstein, and here we are with your morning flash update for this Thursday, the 6th of March, 2025. We're just about 8:17 a.m. Central Time. Right now, if you're watching Bloomberg at this exact hour, Ms. Lagarde is explaining the European Central Bank position on all that's going on. She's discussing the defense spending, the upending of what it means. She's made it ultra clear that if the bank was ever data dependent, it's going to be more so even now because the events are changing, she said, from day to day. It is chaos, to put it mildly, but the world was upturned when the U.S. said, nope, there's no blanket defense for Europe any longer under President Trump. And now the spending has to go on. This should have been going on. It's not her job to say that. I can say it. And it should have been going on for a decade. They just postponed it forever, counting on the U.S., how they're there to protect us, similar to what Canada, Mexico look at. And we get it. But now with the Ukraine war and how it's all gone, and the U.S. to proven itself to be not the best of allies. I think that we're a difficult ally, to be honest. And the trade war is about to hit, and the uncertainty around them. They want a quarter point cut. That doesn't mean they'll go more or not. All right. Let's take a look at the rest of the day's information for you right now, too. Challenger Gray, this was a surprise. The U.S. employer planned job cuts. They went up to 172,000. If you look back in January, there were 49. That's almost 4 times the amount. Whoa. Fourth quarter revised non-farm productivity came out. Up 1.5%. They thought it would be 1.2. It was 1.2 on the prelim, so we're getting more out of less. Fourth quarter non-revised labor cost was up 2.2%. They expected it up 3%. Whoa, that's a bit different. Initial claims dropped by 21,000, but they went up in the continuing just shy of 1.9 million. But these numbers still show that if they're taking into account everything, that the job market's still in fairly good shape here, strong shape actually. U.S. January trade balance came out 131.38 billion. They expected 128.7. So this really soared in the last month, but a lot of this has to do with products that were coming in ahead of the tariffs. So ahead of it, you would expect that's going to be the case, and that's the surge. You could get one more of those because the tariffs still haven't hit everywhere. January wholesale inventory and sales data come out at 9 o'clock. You can see that. And you're going to get the rest of the report in terms of what we get in energy numbers coming out. And they're looking for, in the natural gas, 99 billion cubic feet withdrawal. All right. So let's take a look at the chart action and see what we've got. The stock market down and down hard. So we had a flurry of a rally yesterday that's not holding. That's the right way to look at it. You're backing off already in the nat gas. Remember, nat gas got a shock when 10% tariffs went on energy out of Canada. Other markets are sort of a mixed bag, not much of a bounce. I'm not impressed with that. Bonds and notes, well, you've already fallen down. You've come back on this news because it is moderate news, but the markets got hit fairly hard early on by these numbers. And now the question is, what does it all mean? And I'm telling you, traders are questioning what it all means. When we look at corn, it tried to rally. It's given up a nickel of it already. The soybean market only up 5 cents. So it's interesting to see what's going on there as well. As we step to the gold market, as I told you, I thought the pros went short the market in the 29-21 area. And I wouldn't be surprised if they covered some of that as the market hit the 2,900 zone. But the market's still under pressure. The dollar continues to get beaten up at the expense of currency moves against the dollar. And as you know, I put out a special report that many of you, I saw the numbers on it, many of you looked at yesterday. I believe what President Trump is engineering has to do with him taking the U.S. economy to lower levels right now, right away. This was his promise in its own way. He said he was going to break interest rates. He said he was going to break down energy prices. He was upset with the dollar. When he took office, the dollar was 109.20. It's under 104 on the index, so it's come down very hard. He has not mentioned on his Truth Social but one time the stock market. So I believe that he's rushed to take care of the border, immigration, Doge cutting things, slowing things down, getting the 10-year notes down to levels back, probably his goal is under 4% there, and letting the economy get slow enough to get the Fed to step in and have to support things where his policies get supported by them. The tariffs will bring in the money, the tax cuts will be next on the agenda, and later on he'll turn his attention back to the U.S. Why? Because his factories move here and his supply chains have to move here under his tariff rules. What will take place is he believes that makes America stronger again. Got to keep all this in the back of your mind. It's very important, and I think my report was good. It'll go off now, this morning, but you can go to YouTube under my name and catch it. Pivot points. If there's days you want to look at it, it's right now. This is the kind of volatility that this particular study is made for. That doesn't mean it will work or won't work. It's made for this. So once you learn the concept of it, and just about all of you that have a good charting service have it, the question is, do you know how to use it? And do you know how to put momentum with it? I have a 3-part free video series for you on it. Just simply go to our website, iraepstein.com, go to free offers. It's there. Sign up. We'll send it to you. Move your cursor up here. You'll see an icon for it. That'll take you there as well. I will catch up with you all at the end of the trading day. Buckle in. Nothing's been easy so far, and it's probably going to be another wild one. You take care.